Sonda. I'm going to be taking you through 2.4, Zika taxation. You're welcome. And we begin. What you have to know about Zika 2.4 taxation is that it's a rules-based exam. So for you to clear that exam or for you to pass with good marks, you're supposed to learn and understand the rules that are there in 2.4 tax. Okay? You're supposed to have the ability to apply those rules in your exam. You don't just have to master them. One of the main reasons why most students fail is that they try to master the rules instead of learning them so that they become a part of you. When you begin to practice 2.4, you begin to understand that the rules are not necessarily supposed to be mastered. They become part of you, even as you are carrying out a calculation for any tax assessment, you'll be able to apply those rules even without thinking about them due to practice. And if you're asking how this is going to be done, that's the reason why I'm here. So firstly, we're going to look at the importance of paying tax. What is the importance of paying tax, you might ask? Why should citizens of Zambia pay tax? Number one, tax is the main source of government revenue. So the reasons why we pay tax in Zambia is to raise revenue for Zambia. There are different types of taxes that are charged in Zambia, which we're going to look at in the following slide. Number two is to balance wealth distribution. Number three is to avoid externalities. Number four is to maintain well-being of the environment. And lastly, number five is to influence economic activity. Without revenue and without income, the government cannot fund economic activity, infrastructure development, building of roads, funding of government projects. All these cannot be done without revenue, and taxation or tax is one of the main sources of revenue for the government. Number three is, what are the main types of tax charged in Zambia? Number one is income tax. I'm sure we're all aware of this. Income tax is charged on the income that you earn as an individual or as a company. If you're working, I'm sure you're well aware of the relevant deductions that are there, and income tax is one of the main deductions that you have from your emoluments and your employment income. Number two is value-added tax. Value-added tax is an indirect tax that we pay on the products that we buy. If you're one person who checks your receipts when you go to the supermarket or when you go to the store, or when you go to a store that has a VAT system, you'll be able to see the amount of tax that you pay, which is about 16% on the product that you buy. So value-added tax is an indirect tax. It's charged on the expenses that we spend on the products that we buy. Number two, customs and excise duty. This is the type of tax that you pay on goods that you've ordered from outside the country. If you have experience in ordering maybe motor vehicles, or you've ordered something online via eBay or via any other website, online website, you will notice that in a way you paid customs and excise duty, which we'll look at in the next session. Number four is mineral royalty tax. Number five is property transfer tax, which is at 5%. Number six is turnover tax, which is at 4%. And number seven is presumptive taxes, which is tax for most bus drivers. Next, we look at direct tax. What is a direct tax, you might ask? A direct tax is a tax levied directly on the income and gains of an individual. Normally, a percentage of the income or gain is paid in the form of tax. Examples of direct taxes in Zambia are income tax, mineral royalty tax, and property transfer tax. In general, direct taxes are progressive, which means that the amount of tax payable is dependent on the level of income. The higher the income, the higher the tax. The lower the income, the lower the amount of tax. Persons whose incomes are low, income levels are low, therefore will not pay the same amount of tax as the high income earners. For example, let's look at indirect tax. Indirect tax, these are taxes that are imposed indirectly. They are expenditure taxes and therefore are borne by customers. Traders who are registered for charging indirect taxes charge these taxes on the supplies they make and collect the tax on behalf of the Zambia Revenue Authority. indirect tax collected must be paid to ZRA by a set date. Okay, an example that we have of indirect tax could be value-added tax. Okay, the indirect tax payable does not depend on the level of income of the consumer. Both those who are in the low income group as well as those who are in the high income group pay an equal amount in the form of taxes. An example of an indirect tax is value-added tax. If we talk about value-added tax, we come and learn that value-added tax is a regressive tax, meaning that it's the same for all income earners. Whether you're a low income earner or high income earner, you still pay the same amount of tax. So you find that we are in situations where the low income earners find it difficult to pay value-added tax, and for the high income earners, it's not so much because it's still fixed no matter the amount of income that you're earning. We look at capital and revenue taxes. If you are an individual who's done financial reporting, capital and revenue can also be explained as current and non-current assets. If you've done that, then capital and revenue taxes shouldn't be something very difficult to understand. So now we go into detail. Capital taxes are taxes charged on capital receipts. So I would say non-current assets rather, or capital items. So if you are one who sells capital items or non-current assets, that income that you gain from selling those products is the capital tax that we are talking about. So what is a non-current asset, you might ask, or what is a capital item? It's a capital, it's a product, it's something that you intend to keep for at least more than one accounting year, okay? And a revenue item or a current asset is an asset that you intend to resell. Okay, so now looking into detail for capital taxes, these are taxes that are charged on capital receipts. A capital receipt is an amount of receipt resulting from a disposal of a capital item. An example of capital tax in Zambia is property transfer tax. Like I said, non-current assets are assets that you intend to keep for a long period of time. Take for instance, building or motor vehicles. If you sell those motor vehicles and you make a profit, your income on that sale or on that disposal is what we call property transfer tax, and currently it's at 5%. That's the capital tax we are talking about. Now, looking at revenue taxes, these are taxes that are levied on revenue receipts. A revenue receipt is a receipt arising from the sale of a non-capital item, or rather on a current asset. Items acquired with a view to subsequent resale are non-capital items. When they are sold, the amount received is a revenue receipt or income and is subjected to revenue tax. An example of revenue tax is income tax. We look at progressive, regressive, and proportional taxes. Proportional taxes are taxes that represent the larger proportion of the person's income as that person's income rises. The average rate of tax rises as well. The rates of tax for lower income levels are less than the tax rates for higher income levels. An example of progressive tax is income tax. Let's take, for instance, an individual who's receiving a salary of 8,000. Most definitely, the amount of tax that that individual will be levied will be different from the amount of tax that an individual who's getting 80,000 kwacha per month is going to receive. Okay, that's the income tax we are talking about. Income tax is a proportional tax, meaning that it's higher for higher income earners and it's low for low income earners. An example of progressive tax is income tax. Yeah, lower income is chargeable at lower rates and higher income is chargeable at higher rates. Nextly, we look at regressive tax. Like I mentioned, we talked about VAT in the previous slide. I was saying that VAT is a regressive tax, meaning that it's the same for all income earners. So meaning it can be a burden to lower income earners, and to higher income earners, it can be an advantage because for them, it doesn't matter the amount of income that they earn, they'll still pay the same VAT as someone who's earning way less than they are. Regressive taxes are taxes that represent a smaller proportion of a person's income as the income of that person rises. The average rate of tax falls. Value-added tax is a regressive tax because the rate of VAT is the same on the product, whether the product is bought by a rich person or a poor person. So take, for instance, a phone that is being sold at 10,000 kwacha and we have VAT charged at 16%, right? Most definitely, we know for sure that that tax is going to be 1,600 on top of that 10,000 kwacha phone, okay? So for someone who's earning 100,000 kwacha in a month, buying that phone will not be so much of a stress, and that 1,600 tax will not be so much of a burden compared to someone who's earning a salary of about 7,000. So you see how regressive that VAT can be, okay? Next, we look at proportional taxes. These are taxes where the percentage of income paid in taxation always stays the same. The average rate of taxation is constant irrespective of the level of income. An example would be a fixed percentage rate on investment income. What are the sources of tax law? Obviously, the main source of taxation is statutes. Statutes or acts of parliament make it legal for taxes to be levied in Zambia. The main statutes in Zambia include the Zambia Revenue Authority Act, under which the Zambia Revenue Authority, or the ZRA, is set up. The next is the Income Tax Act that governs the income tax in Zambia. Thirdly, we have the Value Added Tax that governs the VAT, the Customs and Excise Duty Act that governs the Customs and Excise Duty, the Property Transfer Tax that governs PPT, Property Transfer Tax, the Mines and Minerals Development Act that governs mineral royalty. What is a charge year? A charge year is a year in which tax is chargeable. It is also known as a year of assessment, fiscal year, or income tax year. So you really have to pay attention when talking about charge years, as it is a very important and vital aspect of taxation. If you mess up charge years in your exam, it's highly likely that you have messed up the calculations in total. You really need to pay attention to the charge year in which the tax is charged. Because if you do make an error in the charge year, then most definitely your entire calculation will be wrong, because it won't be relevant for that particular year that you've put. Okay, it is vital that you pay close attention to the details concerning charge years in the exam. Any mistake in the charge year applicable may lead to errors and consequently a loss of marks, which is what we do not want. In Zambia, a charge year runs from January 1st to 31st December. For example, the year from 1st January to 31st December 2021 is the charge year 2021. The charge year is very important when dealing with income tax, as amendments to the Income Tax Act generally take effect from 1st January. Persons liable to income tax. Income tax is chargeable on the income of persons resident and ordinarily resident in Zambia. The term person refers to individuals, legal persons such as Zambian companies. Okay, so residence is a highly examinable topic in the 2.4 exam, and you really need to pay attention to the definitions and understand what it means when someone is resident, what it means when someone is ordinarily resident, what it means to be a domicile, and you also need to know the criteria of residence for a company. Most of the times you find these in the exams and they are worth about 3-4 marks, okay? And you can't let all those marks go away just like that. Okay, so in the next slide, we're going to be looking at the definitions of residence. What is residence? Take note that residence is in two parts. There is residence of an individual and there is residence of other legal persons, such as a company. So on the part of an individual is resident in Zambia if he's physically present, if he or she is physically present in Zambia for not less than 183 days in a charge year. For example, if Mr. Mbewe is physically present in Zambia for 183 days or more in the charge year 2021, he will be resident in Zambia for that charge year. Residence for other legal persons, such as companies. For a company to be resident in Zambia, at least one of the two criteria have to be satisfied. Okay? So you must remember in the exam, if you're given a question, most of the times when you're given company taxation in the 2.4 exam, they'll usually mention to say VATRA PLC is resident in Zambia or it has its place of effective management in Zambia, you really need to pay attention to whether that company is resident in Zambia or not. Most of the times, it's a highly examinable question in the exam. They might not ask you the direct definition of residence. Sometimes they will ask you whether a company is going to be charged tax in Zambia or not. And you know the criteria for a company or an individual to be taxed in Zambia, that company or person should be resident in Zambia. So like we said, for an individual, it's not less than 183 days that person should be physically present in Zambia. And for companies, there are two criteria. At least one should be satisfied, not both, just one. The first one is the company must be incorporated or formed in Zambia. Any company that's incorporated and built and formed in Zambia is going to be resident in Zambia, regardless of where the board of directors or the place of effective management is. Okay, so a company can be formed in Zambia. Let's say, for example, Phones PLC company is formed in Zambia. Okay, it's incorporated in Zambia, but its place of effective management is maybe Tanzania. That company will still be taxed under Zambian taxation, regardless of where its board of directors are. Okay. Number two, sometimes you find situations in an exam where you're given that a company it was incorporated in Arabia, okay? And the place of effective management is in Zambia. The board of directors are in Zambia. It's effectively it's effectively managed in Zambia. Okay, you find a question like that where they tell you to say, okay, Laptops PLC is a company that was formed in Tanzania. Okay, they are into making laptops and manufacturing laptops, but the place of effective management is in Zambia. Once you hear that, once you see that statement in the exam, you know for sure that that company is going to be taxed in Zambia. Okay, so there are two criteria for company residence, and only one should be satisfied. Don't forget this. Number one, it should be incorporated and formed in Zambia. Number two, the place of effective management must be in Zambia. Okay. Ordinary residence and domicile. Okay, individuals who normally live in Zambia are resident and ordinarily resident in Zambia. So if you're an individual who's living in Zambia currently, you're considered to be resident and ordinarily resident in Zambia. So if you're an individual coming from a foreign country, and planning to be in Zambia for more than 12 months or at least a year, you are deemed to be resident and ordinarily resident in Zambia from the date of arrival. Okay, so if your intention of coming, if you come to Zambia with the intention of being here for more than 1 year, regardless of what you've come to do, whether you've come to visit a relative, you've come to visit a partner, you've come here for vacation, you'll still be considered resident in Zambia if you intend to be here for at least 12 months or more. Now, looking at the concept of domicile, domicile relates to the place which an individual refers as their permanent home. Okay, so wherever you consider to be your permanent home is where you'll be considered domiciled. A person is domiciled in the country that is his or her permanent home. A domicile is of two types. Okay, there is one. The first one is the domicile of origin. This is the domicile that is acquired at birth, okay? The place where you were born is considered your domicile of origin. It is a domicile that's given to you by virtue of you being born in that country, okay? This means that individuals are domiciled in the country in which they are born. Number two, we have a domicile of choice. This is a domicile that is acquired by choice by individuals who are 16 years and above. Okay, so for example, I am born in Zambia. My domicile of origin is Zambia. But if I decide to go and live in South Africa, that is my domicile of choice. Okay. Next, we look at the tax system in Zambia. The tax system in Zambia is a source-based tax system, meaning that foreign income may not be assessed in Zambia if its source is deemed not to be from a Zambian source. Individuals who are domiciled in Zambia would be liable to Zambian income tax on their foreign income, whether that income is remitted to Zambia or not, unless the income is specifically exempt from tax. Lastly, we look at persons exempt from tax. Okay, firstly, we have the Republican president of Zambia. Secondly, we have the local authorities, approved funds, registered trade unions, political parties registered as a statutory society under the Societies Act. All right, this is where our introduction to 2.4 taxation ends. But in the next lesson, we'll be looking at personal income tax. And I hope you are aware that the current income tax bands that we are using, where the tax-free income is at 54,000, it's only applicable from now till the March 2023 session. I hope all of you are aware of the budget changes that the current president has given. Okay, so the new tax-free income is going to be 57,500, which will be applicable from, I believe, June 2023 going forward. So if you are planning to write 2.4 between now and March 2020, between December and March 2022, I suggest that you do it quickly before there are any major changes, because most definitely there are going to be some minor changes in the 2.4, which you have to adapt to. Thank you very much and see you next time.